All right, so cool. So let's jump into it. Let's talk about what support and resistance is and how we can use it to make some profitable trades within the cryptocurrency and stock market. So let's break down what support and resistance is. So starting off with support, okay? Support is going to be an area that looks like a V. So I'm going to start off just on my 4-hour time frame here, and we'll break down what time frames here are in a second. And I'm just going to look at my chart. So I can see that market decided to make a deep V near this down area here around April 7th. Okay, so whenever I see market making a deep V and bouncing within an upwards direction, that's going to go ahead and show me support. Okay, and there's going to be some larger sweeps than others, and this would be an example of support too. Okay, I can see price came down, made a V, and then bounced upward. Okay, even right here, anytime I see price making a V and bouncing in an upwards direction, okay, that's going to show me an area of support. Okay, so as we can see, market is bouncing and then making a V. A market making a V, so markets will fall down and then make a V point and then bounce up. So whenever you see market making a V curl, okay, after dumping downward, that's going to signify the area of support. And opposite of support is going to be resistance, which is going to look like an upside down V. Okay, so support is going to look like a normal V, and resistance is going to look like an upside down V. Okay, so whenever you see areas such as like right here, for example, creating upside down V's, also known as wizard hats, I like to call it, that's going to signify areas of resistance. Okay, and these are going to be located on cryptocurrencies and stocks alike. Okay, so whenever you see price making a upside down V point, that's going to signify an area of resistance. Okay, so we have the V point where market decides to V and curl upward. That's going to be support. Okay, and then we're going to have the upside down V point where market decides to fall downward. And that's going to be resistance. And resistance, all it is people selling. Okay, so whenever you see market going in a downwards direction and making a sharp top and then falling down, okay, what that means is it's people selling. Okay, it's people selling. Okay, that's what resistance is. It's people selling. And let's understand why people are selling. Okay, so the goal of most cryptocurrencies and stocks is to go within a upwards staircase direction. Okay, so the reason people are selling is because there's people who are in from the beginning of time. Okay, and as we can see, the price action near beginning of price is way lower than it is today. Okay, so it's way higher than it is today. And that's because the goal of the stock market and cryptocurrency markets is for it to go within an upwards direction because the market is based off of value. So the more people invested within a crypto or stock is going to increase its value. And what increases its value is something called market cap. Okay, and you see this number over here. Stocks have it, cryptos have it as well. And market cap is pretty much going to be the number that shows you how valuable something is. So if something has a super high market cap, it's showing you that it's valuable. So Bitcoin out of all the cryptos has the highest market cap. Second place is going to be Ethereum. Okay. And Bitcoin has the highest market cap because there's the most money in it. Okay. So stuff that normally moves within a upwards direction over the course of the years generally has a high market cap because it has value in it. Okay. So that's why resistance, yes, 100%. Market cap shows you value. Exactly. And normally stuff with high market cap trends within an upwards direction. Okay. So yeah, so that's why resistances get created, is because people are selling after holding for such a long time and holding from these lows all the way over here. Okay. So the goal that they're doing is they buy low and then said they sold high. Okay. And then, but when they sell, resistance gets created. Okay. Resistance gets created. But then after heavy resistance is created, okay, take this area right here, for example. I'm gonna go ahead and put a box on this area of resistance right here. So check this out. Price decided to fall in this area twice. Okay. This is going to signify an area of resistance. Why? Exactly. Whenever you see people selling heavily, sharply from an area, especially on your higher time frames, and your time frames are going to be at the very top here, and the time frames are going to show you how much of time each one of these candlesticks correlate. So if I'm on the daily time frame, okay, then each one of these candlesticks that I see here on my screen are going to represent 1 day. Okay, they're going to represent 1 day. And gotcha. So yeah, exactly. Market moves in a rhythm. So market moves pretty much all together. Okay. So whenever you see levels being reacted off of within the same area, that's going to be a strongly, heavily reacted area. Okay. And boom. So resistance was created twice in this area. And then as you can see over here, it eventually did get passed. Okay. But we're just going to go ahead and keep it simple, and then we'll break down on the logics as we keep going. So that's going to go ahead and be the area of resistance here. After resistance was created, price decided to fall down, and it kept trickling within a downwards direction. But it doesn't fall to zero. Okay. There's laws in place to make sure that cryptos and stocks do not just fall down to zero. Okay. So if anyone who has that thinking that it's going to fall down to zero, it's not going to happen. There's stuff called the short sale restriction. Okay. There's laws in place set to make sure that stuff doesn't just crash to zero. Okay. Because the stock market and the crypto market is a big reason why the economy moves forward. Okay. People's Roth IRAs, stuff like that, 401ks, etc. Okay. So boom. So talking about this area of resistance here. Okay. As we can see, price decided to fall in a downwards direction. Okay. And it didn't crash down to zero. It actually stopped at a point. So price decided to stop down here. Okay. So price decided to stop down here and then decided to trickle upward. Okay. And when price stops and makes a V, that's going to signify support. Okay. And the reason why support gets made is the opposite of resistance. Okay. Support gets made exactly because people are buying. So support gets made because people are buying. So whenever you see price start making a curl within an upwards direction, then you know people are buying. Okay, so support equals buying. When you see a V and then price curling upward, okay, buying is happening. When you see price making an upside down V and then selling's happening, trickling downward, resistance is created and selling's happening. Okay, so that's the difference between support and resistance. Now, we're going to talk about the different types of setups that we are able to take on stocks and cryptocurrency. we are going to use these setups to trade bullish scenarios, okay? These are going to be used to identify sweeps to catch lows, okay? To catch the market all the way back up, okay? I'm going to show you how to trade breakouts, how to know a market is going to be bullish, okay? And then I'm going to show you the final model, which is going to be called break and retest. I'm going to explain all of them here, okay? So let's talk about the logical perspective of the market one more time. So understanding that the goal of the market is to continue to keep breaking new all-time highs. Okay, so if I'm on Bitcoin here, I can see that the all-time highs is going to be right here. Okay, this is the highest point of the chart ever in existence. Okay, so boom. So I know that one, in order for price to make new highs, price has to break resistances. Okay, so that's going to be the first logical thing we're going to understand within the market. Okay, in order for market to go in an upwards direction and make some new highs, resistances have to be broken. Okay, they have to be broken. If resistances don't get broken, then price cannot continue within an upwards direction. Okay, so that's going to go ahead and be the first piece of logic we're going to understand. So I need to understand that price needs to break all-time highs in order to progress. So price has to break all-time highs in order to progress. So price has to break resistances in order to progress. So now that we understand that, let's go ahead and let's jump into the models here, and then we'll go ahead and we'll blast through questions. And then boom. So let's talk about model number one here. Okay. So this is going to be the most simple model. Okay. Just like we talked about, price cannot progress unless it breaks past an area of resistance. Okay. So just like over here, price decided to fall down in the same area pretty much twice. Okay. We can see right here, price created the first resistance, and then right here, price didn't quite break it. Okay. But then come over here, price decided to break out of it. Okay. So this is going to be the first model we're going to talk about. Okay. And this model, we're going to have to talk about some things with this as well too. Okay. Just to make sure we don't ever get faked out. And this is going to be the least probable model that you're going to want to be playing. But this one is important to know if a chart is going in an upwards direction or not. Okay. So if you see resistances being broken, that's going to be called a break out. Okay. So when an area of resistance or support gets broken, that's going to be called a breakout. Okay. So it gets tired of rejecting at the same level, and then it decides to finally progress and break out. Okay. So you are able to trade on resistance breakouts. Okay. There's going to be some certain criteria for it, but a resistance breakout is going to be the first model that's going to be playable. Okay. Within a long scenario. Okay. Because when you see areas of resistances being broken, then you know that price wants to stop rejecting and it wants to go within an upwards direction, and you'll be able to move with the herd. Okay. Inshallah. So yep, resistance is created by the same area here. So resistance is going to be an area that rejects multiple times. So if I zoom in here, you can see the area of resistance got hit once, and resistance was created twice here. Okay. And then over here, it decided to get broken. Okay. So only when the resistance breaks, only when the resistance breaks does it matter. Exactly. So boom, the resistance has to break in order for the entry to be valid. Okay. So that's going to be model number one. Now, breakouts can be an entry. Breakouts can either be an entry or, great question, breakouts can either be an entry or they're going to be a confirmation. Okay. So they're either going to be entry or confirmation that price wants to go up. Okay. So model number 2 is going to be break and retest. This one's very simple. This is the best model. Okay. This is the S plus model. Okay. The best model, better than A plus, best model in the game, the model that you want to take 99% of the time. You can use this model to catch falling downtrends as well too. So if market's going in a downwards direction, you can use this analogy to see where market might want to bottom out at. And this is going to be called break and retest. Okay. So once price breaks an area of resistance, it has a potential chance to turn resistance into support. Okay. And if you pull out the emoji on your phone, the stock chart is going to look like this. It's going to look like a staircase. And the reason why it looks like a staircase is because once resistance turns into support, then you know that price definitely wants to most likely hold that as a leg and continue to the next area. Okay. So take Bitcoin, for example, here. If I zoom in, okay, go to my 4-hour here, I can zoom out. I can see here on Bitcoin that on this area of resistance over here, okay, go ahead and put a circle on this, zoom in, okay, this area of resistance, okay, price stopped here and fell down. So that's an area of resistance, okay. So this area of resistance here decided to get broken right here, okay. Once again, once an area of resistance gets broken, that's a break out. Okay, so price broke out right here. So that could have been one potential entry. And if you didn't enter at the breakout, it's fine. What you can do is wait for a pullback. You're going to wait for the resistance that was originally broken out of to turn into support. And then you can go ahead and take the gap fill from the original breakout. Okay. Easy. So I like the first break and retest is fine too. It depends. So in this situation, I wouldn't take the first break and retest just because there wasn't already resistance ahead of me. But if I entered like down here, for example, like if I entered like right here and I can clearly see, like say I entered right here, hypothetically, and I can clearly see there's resistance above me, like right here, then I can use the resistance above me. So then I could take the first tap if I wanted to. But since over here at all-time highs, there wasn't structure above me, I wouldn't have been able to take this one securely. Even if it did retest, I would have had to wait till this resistance got created first right here. Right here. Yep, because the breakout. Yep, exactly. From the first breakout. Because I don't know where it wants to stop. Because I can't predict this. The entry, yep, the entry was right here, the retest. I waited for resistance to be broken and turned into support. Yep, and that's going to be the safest model to long within the stock market. And it also works within, yep, break and retest. Yes. And break and retest to the short side is when you're going to be waiting for support to be broken and turned into resistance. Okay, so resistance, once broken, has a chance to turn into support. Won't do it every time, but once it does, you know it's clean. And support has a chance to be broken and turn into resistance. Once again, won't happen every time, but when it happens, it's clean. Okay, so break and retest, you're going to be waiting for resistance above current price. And remember, current price is always going to be to the far right. So on TradingView, it's always going to be the moving number. The current moving number is current price. Okay. So in order to trade the second model, break and retest, you're going to look for resistance above current price. Okay. above current price, okay? And you're gonna ideally look at the 4 hour, okay? Look at the 4 hour or 30 minute, okay? And we're gonna look at the resistance above current price. Then you're gonna wait for the resistance to be broken. 30 minute. So the 4 hour is gonna be for crypto and stocks, okay? Because sometimes the daily is gonna hide candles. So I like to look at the 4 hour. So I like to look at the 4 hour, and then I use the 30 minute for stocks, okay? But for crypto, I just use the 4 hour, but for stocks, I use the 4 hour and the 30 minute, okay? To be broken. So then after resistance above current price is broken, wait to see if it turns into support. And if it does, then you can enter. Yep. So once again, you're going to wait for resistance above current price to be broken on the 4 hour or 30 minute. And then you're going to wait to see if resistance turns into support. And then you can take it back up. So for example, if I'm on Bitcoin here, if I wanted to take a trade on Bitcoin, I would get on the chart, look at current price, which is going to be 113,162 right now. I know what resistance looks like. It's going to be the upside down V's, okay? Upside down V's, and then price is going to start trickling down, okay? So I'm going to show the crypto example, and then I'm going to show the stock example, okay? So for crypto, I like to just stay on the 4 hour, and I'm going to look above current price, okay? I'm going to look for resistance above current price, okay? Above current price. Yep, so current price right here is 113,000. The far most right candlestick is going to be current price all the time, okay? So I'm going to go ahead and just mark this area of resistance up here, okay? So I can see up here, price decided to come down and then hunt this resistance and then decided to trickle down, okay? So I like how price decided to go down and then hunt this resistance and then fall down. And I could see on the 4 hour here, I have a lot of taps near this orange line, okay? 1 candle, 2 candle, 3 candle, 4. Okay, around 4 candles around the same spot, okay? So the more candles reacting at the same spot, the better, okay? So, and that's resistance. Yep, because I see price falling downward and then it fell down heavy from here, okay? So now I can see this is a heavy reaction. So now I could wait for a couple of things here. I can also mark this area of resistance here too on my 4 hour, okay? And what I'm going to be waiting for is price to do this. So price is currently right here. I'm going to wait for price to get above the resistance, okay? Some people like to enter when the resistance gets broken, okay? That's going to be the first model. If you enter on a resistance breakout, okay, you need to wait for a 30-minute close. And what that is you're going to go to your 30-minute time frame, and to the far right, you'll see a timer, okay? And once again, each one of these candlesticks, depending on what time frame you're on, depict what you're looking at. So if I'm on the 30-minute, each one of these candlesticks are 30 minutes. Yep, exactly. If I'm on the 4 hour, each one of these candlesticks will be exactly. If I'm on the daily, each one of the candlesticks will be exactly. Okay? It's going to be every day. So boom, let me go ahead and do this here. Make sure I have all the, okay. So boom. So this is going to be the crypto example. Okay. Get on my 4 hour. I went ahead and just marked out some areas of resistance above current price. Okay. So I just did a couple of them. Okay. I did this resistance, this first one up here. I saw price spike downward from here. Yep, resistance is above current price, because if resistances are being broken above current price, then we want to go in a upwards direction, I assume. Okay, resistances Yep, and resistances have to be broken in order for price to go up. So if these resistances get broken, then I know we're going to be good. So if you did enter on a breakout, then you would have to wait for a 30-minute close. So what that means is if price gets above this orange line right here and then gives me a 30-minute close, so look at this timer over here. I'm not going to enter as soon as price breaks the orange line. No, I'm going to wait for the second candle. Okay. So I'm going to wait 30 minutes after the breakout happens. Okay. So whenever the breakout happens, you're going to wait for a second candlestick to be formed. You're not going to enter on the first candlestick break. You're not going to enter on this one. You're going to wait for a second one to be formed like this. And if a second one forms, a completely separate candlestick on the 30-minute forms, you can enter. You never enter on the first candlestick. It doesn't matter. Nope. Colors don't matter. Colors don't matter. So just a candlestick has to form. Yep. So before trading a breakout, wait for a 30-minute candlestick to close. Okay. So you're not going to enter on the first 30-minute candle as soon as the line breaks. No, you're going to wait for it to close, because what might happen is it might go up in the orange line and then fall back down. Okay. But if you see a second candlestick open above the orange line, the chances of you holding this place is going to be good. Okay. Yep, exactly. That's confirmation. Genius. So on a break of resistance, you're going to be waiting for a 30-minute close. So for the first model, the breakout, you're going to, for breakouts, you're going to be waiting for a 30-minute close above or below whatever level you have marked. Okay. 30-minute close. Yep. And then for break and retest, okay, you're going to be on your 30-minute once again. You're going to wait for a 30-minute close above the resistance or below your level, depending on if you're playing a support breakout, then you want a 30-minute close below the support. If you're playing a resistance breakout, then you want a 30-minute close above the resistance. Okay. Okay. Yep. Okay. And then for the second model, break and retest. So instead of entering right at the resistance break, you're going to wait for resistance to get broken, and then you're going to wait for the candle to pull down to the resistance and turn it into support. And for break and retest, you're going to do break and retest on your 5-minute. Okay. So it's going to be your 5-minute. You're going to be looking for break and retest. Okay. Yep. So that's where we're going to be looking for the levels on the 4-hour and the 30-minute. But then to see the actual wick, the little wick off, we're going to be on our 5-minute time frame. So once the area of resistance gets broken, then price on the 5-minute should wick off of the resistance, one of these resistances after they get broken, inshallah, and then show us bullish reaction. If I see that on the 5-minute, okay, it's in a wick, it's going to look like this. If I'm on the 5-minute time frame and I see a little wick that looks like this, okay, it should look like that. Okay, you should see something that looks like that, or just some structure being formed. Okay, if I see some structure being formed, okay, like a wick up and then price is going upward, I know I'm Gucci. Okay. Yep, exactly. The 5-minute time frame. Let me try to find you a small example. Exactly. Yep, you're gonna look at the 5-minute time frame. And you're gonna be looking a wick. Yep, you're gonna be looking for a wick. Okay, so on the 5-minute, once the resistance is broken, you're going to be looking for a tiny wick. Okay, you're just going to see a wick off. Okay, it's going to look just like the drawing. It's just going to go above and wick off. Okay, if you see that on the 5-minute, you're good. The wicks look like that. It's just going to do boom. Yeah, it's just going to be buying. boom, buying. If you see buying above the orange line, like if the price gets above the orange line and then turns it into support, and then you see buying, you're good. It's just, don't make it difficult. You're looking for a wick, just resistance into support on the 5-minute. And then, yep, break and retest. And then the final model. Okay, so let's talk about the final model here. So for the final model, this one's going to be not complicated, but it's just going to be a little bit different. So this one here, you really have to look at like your 30-minute really, okay? And this is what I call support and validation, okay? So just, yep. And just like we know resistance can be broken and turn into support, support can be broken and turn into resistance, okay? But there's also times where it might not do that, okay? And there's times where price might just run through the support instead of turning the support into resistance, okay? So here in this example, the support turned into resistance. But then in this example, the support just got ran through. It did not turn into resistance. It just ran through it. And if it does that, that's really good. Okay. But even if resistance, yeah. So here, yep. So support got created here. And then price decided to just run through the support. So just like we know, support can turn into resistance. But if it doesn't do that, then that can be an entry. Yeah, so support doesn't turn into resistance, that's an entry. Just simply, that's it. If it doesn't to resistance, that's an entry. And even if support turns into resistance, you could just wait for the resistance to be broken again, and that's also an entry. Turn into resistance, and it runs through the support, blast through it, that can be an entry. And on the other hand, if price does turn support into resistance, you can just wait for the resistance to be broken. And now going over to just the stocks portion here, and it's all going to make sense here. So stocks is going to be a little bit more manipulated. So crypto, you have to look at global levels, but for stocks, you can do a little bit more cool stuff in manipulation. Okay, so on stocks, it's going to be this indicator, and it's going to be called Market Open Marker by ChartMeter. Okay, this is the only indicator I use. And this indicator shows me when market opens. Okay, so market open for stocks opens at 9:30 a.m. EST. Okay, if you're Pacific time, that's going to be 6:30 a.m. Okay, PST. Okay, so that's when the stock market opens for all players, options, everybody. Okay, 9:30 a.m. Eastern. And if you're on Pacific time, 6:30 a.m. Pacific. Okay, so on options, you can actually just do really, really easy stuff on options. Okay, so on options, if I wanted to make a trade, what I'd like to do is go to my like 15-minute time frame. And what I'm going to do is look for, most of the time, I'm going to be looking for resistances above current price. Okay, I'm going to go over both examples here. So I could just look for a resistance above current price that has a green line in it. So stocks is going to be really, really easy. Okay, so I can see here on Google, I have on the market open marker here. Boom. So have this resistance here, and then I can go ahead and just put a box around here. Okay, so I have 930 resistance right here. And what 930 signifies is the market open. Okay, wherever there's a heavy amount of reaction during market open, that level is a key level. Okay, so I can see here from this market open, price fell down a lot of points, like 5 points of Google. Okay, that's a lot. 6 points about. Okay, that's a lot of points to be falling. Okay, so due to that fact, I know that this area of resistance right here is strong. Exactly. So I know that it's strong. So as soon as market opened, market decided to dump here. So now what all I would have to do is just wait for price to, let's just say hypothetically I took this trade, okay? Let's just say you wanted to wait for price to get above the area of resistance, okay? Turn it to support, and then you could take it up to the next area of resistance, okay? So you could do that, or you could just wait for a breakout, wait for a 30-minute close, and then take the trickle up too, okay? Because sometimes it might do something like that and not give retest, okay? But if it doesn't give retest, that doesn't mean be poopy pants. That doesn't mean the trade didn't come, okay? And we be strict on our model, okay? So let me show you another example here of stocks being extremely easy. So I like to be on my 15-minute time frame here, okay? And I like to do my 4-hour and stuff first just to see, yeah, 15 minutes to look for the entries. But first, no matter what I'm looking at, my daily and my 4-hour are always going to be looked at first, though, no matter if I'm looking at stocks or crypto. But like I said, the 4-hour instead of the daily, just because the daily hides candles. So yep, 4-hour first, and then you can scale down 30-minute, 15-minute, and then no, you can just look at the 4-hour. You don't have to look at the daily because the daily hides candles sometimes. So you could just look at the 4-hour, and then I like to do something like this. Boom. And yep, and since I know that market it wants to go up, okay, I like to always put a zone on the resistance above me. Okay, so I see this resistance here got reacted all over here in 2025 of February, and then this resistance got reacted off of again. Okay, so I know that price wants to try to break this resistance. Okay, inshallah. So now I can get an entry somewhere probably down here and try and swing it all the way up to the resistance. So let's talk about how break and retest can be used for an entry below current price so I can catch the swing up to the resistance. So instead of the resistance above me being the entry, I could use resistances below me as the entry. So what I'm going to do is go to my 30-minute time frame here, and I'm going to look for, and if 30 minutes is not exact enough, then the 15 works too. And I'm going to go ahead and put circles and boxes around 15-minute resistances that have 930 green boxes. So I can see over there, price has a 930 green box on this resistance right here. Let me go ahead and draw a box. Then I'm going to zoom out, see if price had any break and retest reaction off of it. Boom. Okay, it did. So price had break. Okay, it broke right here. And then as we could see, first retest. Okay, break, retest, and then we blasted all the way up to up here. Okay, and then we blasted all the way to up here. Okay, so this is first break and retest. So I think price might want to trickle down to this low potentially, and then try and bounce up again. Yep, and if price holds this support level, then I believe we'll want to curl back upwards. Okay, either that, I could wait for price to try and bounce up the support level, or I could wait for this 930 resistance to be broken. As you can see right here, 930 resistance being created right here. Okay, so I could either wait for the break and retest. You can see 930, 930s. So once you have a 930 breakout and resistance in an area, so when you have a bunch of 930 reactions in an area, you know it's a good area. Check this out. 930 reaction right here, breakout. Check this out right here. 930 reaction, reversal. Check this out. 930 reaction, reversal. Stocks is really, really easy. Stocks is the joke. I'm on the 15-minute. So you can only see these on the 15-minute because you can't see these on the daily. Yep, yep, exactly. And these boxes are representing each day. And boom. Yep. And I could see where all the best levels are for stocks easily. So I can see here that price is reacting off of this level. So price might want to hold this support and either bounce up here, or we'll react at the resistance and turn it into break and retest up here. So either down here could be an entry, or up here could be an entry. Either one. Yes. Yes. Yes, and that's what's so cool about the trading chart. Nice analyzation. Everything that we see to the left is reflective to the right. Okay. That's the reason why break and retest works. Okay. So think of it logically. If you open up your stock, okay, from zero, okay, and it starts right here, say price starts right here, and you sell, right? Price will create resistance. You're the owner of your stock. Say you own 1 million shares and you sold. Price would have to create structure. And price can only really create structure by breaking and retesting first. So that's why break and retest is really going to be the best, because resistance has to be created first. Because every stock starts from pretty much zero, and then resistance has to be made. And in order for price to go up, resistance has to be broken, and most of the time turn it to support. And that's how the first trades ever start. And that's why break and retest is profitable. Okay. So that's going to go ahead and be that. Let me go ahead and end this here.